And we are live. Good morning, everyone, on Friday, November the 18th.
Hey, guys.
Good morning. Good morning.
Okay. And we're here to have a chat about a few things. I guess the first thing is I'll start with a quick overview, maybe introductions again. So I'm Mike Stanty with Stanty Real Estate Marketing. We have, at least on my screen, Michael Boosely, one of our, probably the most robust and handsome team member.
Kind of biggest beefcake.
Biggest, top beefcake. Down below me is Dan Stanty, the broker for Real Broker, and bottom right on my screen is Sano Stanty, founder of Stanty Real Estate Marketing and the most experienced member of our team. Today we are talking about
aging gracefully. Thank you.
Aging super gracefully. Absolutely.
Yeah. Emphasis on the gray.
Today we're going to do a bit of a boots on the ground market update. There are not any stats out from any of the boards or associations out yet. Those happen on the month, and we're middle of the month. So we're going to just talk about our general trends and some informal stats. We're going to have a quick chat about the hunt for short-term rentals and what property types might have a little more risk. And then lastly, we're going to just chat about personal home improvement projects and where you can maybe be spending your dollars, or where we are spending our dollars, and how it might affect the return on your home. So, Dan, I'll throw it to you for the boots on the ground market update, because you have some of the just MLS stats in front of you.
Yeah. So just thanks. Just looking at the last 7 days here in the Calgary region. So I'm seeing there's 323 new listings, 349 pending sales, and 375 sold properties. So that's almost a 1-to-1-to-1 ratio, which means we are in a fairly tight market still. It seems like just about everything that's coming on is selling. I mean, in terms of numbers. So that's a pretty strong market, especially for this time of year. I think typically if we look back in history, we'd see more listings than sales, but we're fairly close right now. And so looking forward, I'll ask the group here, what does that mean for December, for January, February, March, as we get into the spring market? I mean, are we anticipating this trend is going to continue? Is it going to stop? Or is it, are there larger factors at play here that might prolong this type of a market?
Well, I'll jump in here. I think there are larger factors at play, and I think we're starting to see, a little bit of that. Like, especially, I can speak to Calgary, of course. I can't speak to all of Alberta, but Alberta seems to be the place to go to for a lot of factors, for a lot of reasons. Quality of life is high here. The cost of living is low, and people are moving from areas such as Toronto and Vancouver in masses, I guess. So that is a factor. It's a factor that is real and is happening. I also think that my sense, and this is I can't point to any scientific numbers or data or whatever, but only my experience and my gut. And after a while, your intuition tells you something. You learn to trust it a bit more. But my intuition is telling me that we're at the beginning of a long bull market, and for real estate in Calgary at least. And I think it's a good time to be investing in it. So despite the headwinds of interest rates and everything else that we have to contend with, if you're going to put your money anywhere, you put it in Calgary. And we're hearing about developers coming here from Vancouver, Toronto. So all of those things kind of come together and give me some pretty good optimism, despite all of the headwinds that we have.
What just same question. What does the Vancouver market look like right now in the same kind of time frame? What and how is it diverged from Calgary?
Well, I know that Vancouver, they're having some challenges. And I'm no expert in Vancouver real estate, big caveat there, but What I'm hearing is that prices are dropping, they're correcting. Developers are, I was speaking to one of the largest developers, which will remain unnamed, yesterday, and they were saying that, they're usually jumping on properties from Vancouver when the development line comes up. They jump on it. Right now, they're like, yeah, I think we'll just work with what we got, and they're not as furiously optimistic as they have been for such a long time in Vancouver.
Mhm.
I think the same is maybe more pronounced in Toronto, because this group operates out of Toronto as well. So that's what I'm hearing.
Yeah. What do you guys think about the Calgary market in the next little while here?
As we're talking, I'm just looking up from the Real Estate Board of Greater Vancouver some market stats. So they've got some numbers here. 1,900 sold properties. Sorry, let's just look at detached homes. They've got 4,000 active listings, 575 sales in the month of October. And if we look back in Calgary's last 30 days, we've got 900 detached sales, and we currently have 1,509 active listings. So we've got very different dynamics going on. Like, we've got a lot of listings and not as many sales. We've got more sales in that time period.
They're kind of at 25% sale to listing.
They're at 25, and we're at about 75, just based on my rough math here. So,
Sure.
I mean, it's different dynamics happening. I think that something that we haven't talked about, ban on foreign buyers taking effect January 1st. I think that we've seen at the brokerage level a number of international buyers coming through the doors in the last couple of months. I think that there's maybe a bit of a push to try and get money into Canada from foreign markets, where it's going to be a lot more challenging in the future. So, and I'm surprised that hasn't really taken effect in Vancouver. But there's also a further taxes on international buyers or non-resident buyers. I don't recall the specifics there. So,
yeah, fair enough.
Yeah. So, bottom line, invest in Calgary, not Vancouver.
Yeah,
despite the tight market.
I also think seasonally, I don't know, you guys could chime in on this. Seasonally, I think we're going to see a continuation of the market. Like, it typically drops down around Christmas time, but in the Christmas season. But I think it's going to continue to go fairly steady throughout the break here.
Yeah.
What do you guys think?
Yeah, I think that we're going to see the same. Like 2022 in January and 2021 January, there was no
change.
There was no change. I shouldn't say there was no change, but January 1st, maybe even December 31st, the phone started ringing again saying, let's go look at houses. Let's get properties on the market.
Yeah.
I anticipate the same this year.
Yeah,
I think so too. I think we should all work through Christmas. Yeah.
So you'll be taking calls on the Matterhorn then? Is that
I'm just giving my kids my credit card and tell them.
Joke. Sorry.
Okay, should we move on?
Yeah, that kind of the investment discussion you're having there leads kind of naturally into what we're going to talk about next, which is short-term rentals. We have a few folks who are looking for a property that would accommodate an Airbnb or short-term rentals. And we're going to chat briefly about one, how we look for those if you're looking at condos, because at home, obviously you can do whatever you like, but in condos, there are condo bylaws you have to abide by. And then how we evaluate those. So one, how we find them, two, how we evaluate them, and then three, what we're evaluating them against. Michael Boosley made a good point about the risk that is not inherent, but is certainly possible in condos, where if you have a current board operating that are on side with Airbnbs, then you're good to go. But if, say, in 5 years, just maybe using like the rough life cycle of a mortgage, the current board have decided that 5 years down the road, their mortgage is up, they want to sell and move rather than stay in that particular building. There's a big turnover on the board. Then maybe you're looking at a whole new board that are not in favor of short-term rentals, and they change the bylaws on you.
Yeah.
So, Michael, what I mean, you've spent the last year kind of delving into that. What do you?
Yeah, we work with various buyer clients, that are seeking out Airbnbs, and we own, my wife and I, we run an Airbnb right now, so we're familiar with it. So it's good that we see a lot of upside with it. But you've got to, as with every investment, you've got to look at all the risks. And one of the risks that we've determined is, although, let's say a place in Inglewood is got a great location, it's phenomenal. But, out of the 20 units, on the condo board, they've all of a sudden opted to regulate the Airbnbs and short-term rentals, and they're not allowing it. And for some buildings, like rightfully so, it's democratic, to set the bylaws and regulations of a condo corporation. But as an investor, it's just something to be aware of. And so I think, things like detached homes and other, at least properties that you can kind of reduce the risk on that type of thing I think it's favorable.
Yeah, it makes some sense. Of course, there's a lot of advantages with condos and having a condo, because it's, you offload a lot of the maintenance and management, etc. So they're just more readily turnkey. And I think, how you mitigate that risk is, you buy a condo, let's say, for example, Minto's condo in Bridgeland, which we sold the land for. They, that pretty much sold entirely to Toronto investors as a rental, purpose-built rental. Mm-hmm. Not purpose-built rental, I should say. It was for rentals. Quite a different definition. But so if you were to buy into a building like that, you can be pretty certain that the majority of the owners are renters, or I should say landlords that are renting it out, and that it's going to remain that way. So that's what I would look for, is that, what's the majority of the purchases? How have they been laid out initially? Mm-hmm. And I think you can mitigate that risk.
2 comments on that, Dad. So one, I mean, another one of Minto's projects in Kensington, they didn't sell specifically to landlords, but I do recall that their bylaws were tailored to specifically include short-term rentals. So again, if you're buying into a project that is already set up that way and the buyers coming in are predisposed to that, then it probably sets you up in a way that more, or rather less risky. Mm-hmm. It also though brings up this the point of, for condos, at least currently in Matrix, which is or rather Pillar 9, or now Alberta 1. Dan, what's the current nomenclature for
Pillar 9?
Pillar 9. Okay, sorry.
Our MLS provider. Yeah.
So on the realtor facing side, there are searchable terms and fields you can use to look for homes. Short-term rentals is now not currently one of those fields, and whether or not we make it one, that puts added responsibility on the listing agent to make sure that information is correct, because like any database, it's garbage in, garbage out, and we see a lot of that. One of the best examples that I refer back to is just for location. Often you'll find most recently I was listing a home in Auburn Bay, and there was an Auburn Bay home that the location was pinned in Forest Lawn, and it had been on the market for a while. And I spoke to the seller and said, I mean, that's probably not that it's the only reason, but that's one of the reasons that it's not showing up, because it's listed in Forest Lawn. But whether or not you would make it a searchable field and reduce sort of the brute force effort that is required from realtors to look for short-term rentals in condos is one thing. That also, go ahead.
Yeah, Daniel and I have had that discussion. It's not in there right now, and I put in a formal request to Matrix to have it in as a mandatory field, and hopefully in the near term we'll see that as a mandatory field. Maybe that's something that any of the public that are listening don't really grasp the impact of, but it's could make it a lot easier to search for product. Could also add some risk. Like if you don't really know if they're not specifically allowed or disallowed,
Yeah.
how does the realtor really determine that?
Well, you have to be a lot more comfortable with reading the bylaws, and that then maybe adds another layer of review from, say, a condo doc review company even before you list it. Or so there's maybe a few different ways to skin that. But then it also brings up the discussion about condo management companies and the way that documents are provided and how and when and how much it costs, which is a whole other discussion that could go on for.
Boy, that was the discussion we had at an Edmonton Brokers Forum that came up. And apparently there's, they tried to close that loop, and the point is, for anyone just trying to understand this topic, is that condo management companies often make a lot of money just selling documents, a buck a page or whatever they charge. I don't know. It becomes very expensive. So to get a copy of the bylaws, you're often looking at $350, and you guys probably.
I might say that's even light. $350 is maybe if you are listing well in advance and you don't need the documents for 2 weeks.
Yeah.
Then maybe it's $350. But if you need anything on a rush, even just to provide a download of a document, I've seen a few companies charging surcharges for a rush download, which I think is the height of absurdity. But
and the stories I'm hearing is they won't deliver it. You have to go to the office. They will not. Yeah, you have to pay cash. They won't accept anything else other than cash. There's some really crazy stories, and they're able to do this apparently. And I haven't really researched this. They're able to do this, pardon me, because of a loophole in the Condo Act that allows for third parties to charge reasonable fees. And so, of course, the Condominium Act is outside of the our jurisdiction at RECA, so we don't have much to say about it, but it's being looked at, and so that these guys, I'll call them bandits, are not getting away with charging these exorbitant fees for condo docs.
Mm-hmm. I think Michael, you touched on something regarding condo doc review, hiring that out to a consultant, and actually specifically asking them. I think this is what we should be doing, is whenever we do that with our clients, we should ask them, can you also review how they treat short-term rentals? Because I think without that instruction, we won't get the answers in some cases, because as you guys mentioned, like it's a gray area where it's either hasn't been mentioned, or if it has been mentioned, you might not, you just might not delve into it. So
yeah, no, fair enough. Good point.
Yeah.
I just wanted to touch on one other way that we might be able to, and the public might be able to just find buildings that allow rentals, is go to the source, go to Airbnb, go to VRBO, and find where those rentals are. And and that's maybe a way to shortcut the search. I was just looking at a building downtown, relatively new, called Mark on 10th. I thought, that'd be a perfect building for Airbnbs. Not allowed. And so, like if you went into Airbnb, you'd probably find that there are no listings there, or you'd find listings in buildings where they are allowed.
Yeah.
Yes, and that is actually exactly what I've been doing recently, but it's very tedious and
it's not at all automated. Yeah, tedious and like brute force kind of.
I think though, Dan, what is the drawback of doing that is, if you do see the Airbnbs, I think that's a benefit to see them listed on Airbnb or VRBO or whatever it is. Yeah. But that doesn't necessarily tell you the buildings that are imminently or already have on their books a prohibition against it, but they're still listings.
Fair enough.
That's right.
So I think it's a good data point, though, for sure. 100%. That's a good starting point.
Mm-hmm. Just got a comment here from a viewer about, and I'll just include it, about the mandatory representations for both listing and buying agents on short-term rentals, and that condo bylaws can be obtained for $10 a month on Spin. It's a great comment, and it does shortcut some of the fees that might be charged. I think what maybe the challenge is that the bylaws they're fixed in time, and are set, whenever they decided to make the changes. Where you might find more information or more relevant information is in the minutes, where they're talking about changes as you're, progressing through the years, and the minutes, aren't available on Spin, and they just the bylaws can be a little bit out of date based on how the overall sentiment is within the condo.
Yeah, it's a very good point that Marsha makes, and I would only I mean to dovetail into your point. I think that sometimes there are rules. There are the bylaws, then there's rules, and rules around tenancy can be different, and they can prohibit short-term rentals in the rules, I think, as well.
Mm-hmm.
So
But,
it's a good place to look, but it doesn't cover off everything. But yeah, absolutely.
Yeah.
Thanks.
We were going to try to talk about how we evaluate those condos as well, and we can talk about cap rates and and leverage and negative leverage, and how those cap rates then stack up against other investments you might make. But I feel like that is a 2-hour discussion right there. So maybe we'll gloss over it and jump into the last topic we had, which is going to be just what some of our personal projects have been around our homes, and how those might impact the value of your home.
Do we want to touch on the cap rate issue, or just like an overview of it?
Well, sure. Yeah, we'll do maybe a quick one, and then maybe not delve too deeply into it,
Yeah.
and leave it hanging out there as a carrot for a discussion down the road.
Okay. Well, I'll jump onto this because without when you do cap rate calculations, it on the surface looks really simple. It's like, this is what's the cap rate, the going cap rate in the market today. It's 5% or 4% or 6%, or it used to be 8%. Those were the good days, but it's not. And you just simply take the net return, the net income after expenses and normal operating costs, and you have to understand which operating costs we normally include, and then take that and divide by the price of the house of the property, and that's your cap rate. So it seems quite simple. Where you get further down that is the internal rate of return, and the internal rate of return takes into account that, but it also takes into account the interest rate on the money that you're using, the opportunity cost, and some other things, and just takes it a little bit further. It gives you a real number of your return. So there's a couple of things where you have to know is that a good agent will understand how to normalize the numbers before they go in. So if they have maintenance as sky high or super low, or they're not paying themselves management, you have to add numbers for management, things like that. You have to normalize the numbers to get an accurate cap rate to begin with. And generally, in a market like we have today, when interest rates are going up, you do not want to have I'll say this first. When cap rates are 5% and the cost of borrowing is 3%, you have a case where you have positive leverage. So you're in a position where the more you borrow on the property, the higher your internal rate of return. It's almost as simple as that. The converse is also applicable. So when interest rates are going up and the cap rate is not like right now, I don't think the cap rate is going up as fast as interest rates are. You don't want to borrow as much money. So the caution is, without getting any deeper into it, in this market, you don't want to be putting down, you don't want to be mortgaging too much on these properties. You want to put down more than you would normally. Don't leverage yourself. Don't over leverage yourself. That's kind of a general rule of thumb on cap rates. Anybody else want to add to that?
Maybe just briefly, and we can bring in another one of the comments that we've had is regarding cash flow. So the cap rate, my comment about cap rates would be that it is or can be just one of the tools you use to evaluate any kind of a property, any rental property. The question that we have is from Kenneth Lynn, whether or not short-term rentals are or can be cash flow positive in Calgary over a tax year. I mean, I might defer to either Michael or Sano, as they're both running an Airbnb or two, but I would say that it's very property dependent, specifically like whether or not the location can demand high enough rents to get the cash flow up high enough, and whether or not you buy it well enough so that your mortgage is low enough.
Yeah.
So it really depends on your down payment, the location, the rents. But I'll throw it to you guys really quickly for a comment on that.
Yeah, I just a very, very quick comment. The cash flow could easily be positive if all of those things that you listed are, favorable and ideal, like, a great location, close to downtown, or like, some good hubs of activity like Kensington or Marda Loop, close to the university and hospitals. People are not just traveling, they're also like kind of moving and working from the short-term rentals. There's a whole bunch of reasons why people use short-term rentals. There could be a saturation in a market segment of the short-term rentals, if you've got your eyes set on, having a 2-bedroom, or sorry, a place, a 1-bedroom that sleeps one person, but the Airbnb market is completely saturated at that kind of like market. You might not be as it might not be as successful as you think. You've got to really take into account all of these factors. I mean, there's so many other factors as well. Sandra, you might want to touch on some.
Well, I completely agree. You have to run it like any other business. So there are times like if you can't make too many mistakes. It can be profitable, but if you are paying too much for cleaning, and if you're, things like that kind of upset the apple cart, then you're not going to be profitable. I was in one particular one that I just kind of started it, Stampede Week. It was looking like I was going to be famously profitable, and then we've been full, and now for the last almost a month it's empty. So I thought I was doing great, then I thought I was doing okay. Now I'm not sure. I'll break even. Another thing that I'll say really quickly is that there also is a tax, a short-term, I forget what they call it, but a tourism tax that kind of took me by surprise. So if you're listed on Airbnb, you have a tourism tax that you have to pay, and it's not significant, but it's notable.
I think maybe also worth mentioning is that I think that certainly in the early stages, Airbnb and VRBO were really profitable because I think they were operating sort of outside the rules for hotels in a lot of cases. And now that the legislation or that the governing bodies have changed the rules to account for those types of rentals, they certainly are being taxed in a very different way, and they're being monitored and regulated in a way that they weren't before, which is when it was kind of wildly profitable.
Yeah,
because you could do whatever you want, and you were undercutting. Because you could do whatever you wanted, you're able to really undercut a lot of the other hotels or short-term stay options that those advantages have gone away.
Yeah, I think for any buyer like contemplating getting into the short-term rental investment game, I think the most important thing is actually knowing the market. And if you don't know the market that well, like the actual, what to look for, what areas to look for, what types of properties, partner with someone that does. That's truly like the most important thing, because I mean, for God's sakes, in a single neighborhood, one street over compared to another one down the block, it could be a great location versus a terrible location, and it's only one block away in the exact same location. And I mean, it's just so much like other aspects of real estate. Location matters a lot, but kind of boots on the ground knowledge of the actual market is invaluable.
And also, I'll just add that you can really get, you can wreck your entire year if you get a bad tenant. And so having somebody manage the property that really understands the nuances of renting and how to screen tenants is super important, because you get one bad tenant, they wreck your place, or they, produce a movie in there or something, which happens. Like, it's crazy, the stuff that can happen. You think it only happens in fiction novels, but it happens in Calgary.
Yeah.
Like I said before, I think there's a lot of stuff we could cover there. In terms of the evaluation and the different tools that we might use to evaluate an investment. Maybe that's another topic for another day, but
I think so. I think that's a good topic for another day. We can get into that in depth.
Yeah.
Maybe we'll talk about the home improvement projects. And Dan, you've been left out of the conversation for a little while, so I'll throw it to you. And have you got anything you've done to your home recently that you think might have a return if you ever decided to sell, or are you just
no? It's the money pit is what it feels like. Chasing some water issues lately. I think I've got it solved now, but water appearing in places where it shouldn't be, and left me scratching my head and spending money on trying to solve the problem. So no, nothing that would ever increase the value, but now hopefully won't decrease it.
But yeah, important not to decrease the value. Yeah.
What about you,
Michael? You?
For me, well, okay. So my wife and I, we over the last 4 years, we renovated our kitchen, and then we renovated our basement. A very thorough renovation in both cases, but especially the basement. And I won't get into it, but actually but we had done all this work and we hadn't painted like the exterior of our house. It's an old 50s bungalow that's being completely, renovated inside. And so from the street, it looked still shabby, frankly. But this past summer, we repainted it, and it absolutely was like the most effective use of our time and money. Like, like it just absolutely, it's like, it kind of, what's that?
A game changer kind of for.
Oh, totally. Yeah. Like in the Big Lebowski, it's the rug really tied the room together. No, it really tied it all together. So yeah,
I think that's a good point. I mean, despite how great the house can be inside, if somebody walking up has an immediate negative impression because it feels old or shabby in whatever way, it can really actually negatively impact whatever rate of return you're hoping for when you do a kitchen renovation, which is where you're hoping or would expect probably the best returns. Stanoff, anything for you that's been?
Well, we had, for probably I'll say 25 years, we had blue concrete tile, baby blue concrete tile on the exterior of our house here. And I mean, why would you take that off? Because it's like impervious to everything.
Yeah.
It was worth a lot of money if you had to replace it. So of course, but it looked awful. It looked god awful. It was really weird. So to your point, Michael, some things, like I should have done that probably 25 years ago. When we did our house here, we wanted it to be accessible, adaptable, and sustainable. The solar on our house is not giving us a great return. I have to admit that. If anybody knows me, it pains me to admit that. Mostly because of the distribution charges that the utility companies have snuck in over the last 10. They saw this coming over the last 10 years. They snuck in massive distribution charges and administration charges. So the cost of electricity is not the significant part of that. Adaptable. I mean, I have, there's 2 areas in my house that I can turn into suites. One of them is an office. One of them is a music room, but they could be separate suites at one time if I ever wanted to go that way. And so that would maintain some of my value, I think. And then adaptable, the fact that rooms have different uses in the house and I can change them, and I think that just opens up the market. And I think that that's helped me. But in terms of other renovations, I'm dying to put in a hot tub, but my better sense will not allow me to do that. because I don't think it's a very good return. I don't know. Everybody make money on a hot tub?
Oh man,
No.
I don't.
think
We were
so.
tempted last year, and I'm glad we didn't.
Yeah. There's opportunities. I think we've had opportunities where clients are selling their house and they're like, what do we do with this hot tub? And I'm kind of like, I could
Hot
you
tubs
really
and,
need
and pool tables, I think, are two kind of elephants
and
that
pool
you got
tables.
to deal with.
Yeah, you can't give them away sometimes. So maybe there's an
Yeah.
opportunity there.
Yeah. I guess just for myself. So in my also like Michael Boosley in 1950s bungalow, when we renovated the property here, we put a full legal suite in the basement, and that's it provided a great return for us in the meantime while we were renting it out. And now that we've had a couple of kids and required some more space in the home, we've made use of the basement, and I'm in one of the bedrooms now as an office. But it will also be great for us down the road, and hopefully, as you say, Dad, flexible. That when our boys get a little older, maybe this is a little launch pad for them to live semi-independently and get out of mom and dad's hair, but still have some independent space.
Careful what you wish for. They may be there till they're 35 or 40.
Or I think it's going to be an escalating rent situation where it may be prohibitive for them to stay too long. But the only other project that I've undertaken in the last little while was actually just building a rink in the park out behind us for the community, and it was a lot of fun. It's going to be, I think, more work than I had anticipated, but I'm looking forward to it, and we're going to have a little fire pit out there. And Michael's sister is moving back into the neighborhood shortly, so hopefully we'll get to see some people out there that are just enjoying the fire pit and skating. And so that's not a return on the home, but maybe just on the neighborhood in general. Oh, and there goes Sano. I think he may have dropped off there. Probably
Dan, you're muted.
Oh, I was going to say that's probably good timing because I think the rest of us also have to get running here to some 10 o'clock appointments. So
I got to scram too. So I was just going to say that's perfect timing. So thanks for
thanks.
Off.
Thanks, guys.
Yeah, and thanks to our viewers for their questions and comments today. It's awesome to see that engagement. So
good, thought-provoking stuff.
Thanks,
Appreciate
guys.
it. Here's Dad popping in again. Well, I'm going to let him back in just to say goodbye. Dad, we were saying that was good timing for you to drop off because we were going to, I think, end it there. So
Okay.
I think
Yeah,
now that you're back, we'll let you say goodbye. And thanks to everyone who's tuned in or will tune in. Have a great week.
take care, everyone.
Taking the time to listen.
See you guys.
Bye.
Bye-bye.